Hi, this is Keith Schneider, and this is September 25th edition of Market Outlook. So, pretty interesting week. After the Fed announcement, we got a pretty nice response from the markets, although they sort of gave you a dicey signal from a trading perspective on Friday. So, let's get into some of the details right away. Okay, first of all, uh, volume accumulation distribution definitely improved. So if we take a look in here, we can see the number of accumulation days versus distribution days went into favor net overall against distribution, and that is a positive. Not quite a bona fide all out buy signal. We like to see 4 accumulation days or even 5 over a couple of week period, but at least accumulation versus distribution is showing that institutional buyers are definitely on the long side and favoring things. Now, interesting enough, we had a pretty decent week. You can see ranging from the Russell, which was up 2.5%, now the leading index on the year, and overall a fairly positive week on pretty good volume. Net, when I look at the overall picture in terms of volume and price action, it looks overall positive. I'm going to get into some other details that are not as rosy as this one. Okay, so now let's take a look at the sectors. Well, a couple things to note. We actually had went into a bullish phase, and with Friday's action in the S&P, we actually moved back into a warning, which means that we went under the 50-day moving average. Now, the 5-day or the last week's action was still net up, but what happened is the important ground that we picked up failed on Friday. So with that, I give sort of the S&P a neutral. The other thing to note is semiconductors, which had really been on fire, started off really well for the week and actually did not close all that well. What did close in an extremely strong way was, believe it or not, utilities. So up 3.4% for the week. That's pretty good. So generally, utilities, which is a risk-off indicator when looked at versus the S&P, outperforms. It gives you a reason for caution and potential pickup in volatility. Now, we had identified that last week that utilities were poised to outperform, which generally means caution, but look what happened. So you talk about a market that seems to be confused. This is certainly proof because check it out, right? Utilities, right, up 3.4%. And when we get into it, you're going to see that the volatility, the VXX, dropped significantly. So looking at the chart here, it's very important to note 212 is absolutely critical support. Now again, if we regain the 50-day moving average, which is just above 217, that would be a positive. The absolute critical level would be 212, which would probably mean a good drop down to the 200-day moving average, which is 206. Now, one thing you can see also is that we are getting this slight degrading of the number of sectors up versus where they were in late August. So slight deterioration overall. So at best, we can give the sectors here sort of a neutral at best because of the improvement in the utilities, the semiconductors not really retaining leadership this week, and again, failing the 50-day moving average on Friday, even though net overall positive gains for the week. So again, net neutral on the overall view, looking at sectors and price action. Okay, let's take a look at market hotspots. And again, it's probably going to re-emphasize what I just said with a couple of added details. First of all, as you can see, what's happened is gold miners up 4% for the week, one of the leading sectors, including really nice move in metal mining stocks. So natural gas sort of neutral on the week, sugar really strong as well. And so commodities, right, as you can see over the last 6 months, up net on average about 30%. So that is definitely inflationary, something that the Fed is really looking for. So I would look at that as more of a positive, possible growth in the economy, although it seems to be elusive as to where it's really coming from. Now, the other key thing to note, which is an interesting disparity, which I had pointed out just a moment ago, was look at VIX, right? Long volatility absolutely collapsed, and it's sitting pretty much around the lower area over the last 10 years, and we'll get into that in a moment as well. So overall, looks like here commodities still acting very, very strong. Hopefully that means global economies picking up, but that still remains to be seen because the economic statistics are quite varied. So let's move into the market internals. Now this was definitely looking more under pressure last week with the improvement in price action. Look what's happened here. Up, down volume, crossed the midpoint. That's a positive. The McClellan oscillator also finally punched through. You did have a little bit of a reversal because of the change on Friday, but net over the 50% level, and after hitting oversold levels, that puts it into a positive. Advanced declines improving as well. So you definitely have to say market internals definitely made an impressive turnaround this week for the S&P 500. Okay, let's take a look at the next chart, which is the same type of view on the NASDQ composite. Okay, so let's take a look at this. This also broke out to new highs. That impressive action, right? And as we know, we had some pretty decent volume and confirmed, as you can see, overall as well. So very, very nice action and confirmed with some nice volume action. We had basically started improving last week, continued, leveled off, but basically I'm looking at this as a positive. McClellan oscillator, not quite as strong as I would like, but still in a positive reading. I give this still also a positive. And advanced declines reversing from back under the midpoint here. So now that is a positive as well. So as opposed to last week where the market internals, the pulse of the market looked iffy, definite improvement. But again, the price action on that S&P definitely more suspect. So the difference is that the Dow, the S&P versus the composite or the NASDAQ and the Russells acting quite a bit divergent. So net, I give that a slight positive to the upside on price action, but still not extremely convincing. So let's take a look at a couple of other indicators here as well. Okay, looking at the new high, new low ratio, again, not much to report. Again, we actually were looking really good. This sell-off here, and of course, that important 212 support level held, but nonetheless, the internals, looking at it through the new high, new low ratio, now under 70 after being above 90, definitely in a more defensive position. So that continues to remain under that 70 level, and so I give that a negative rating. And again, what we're trying to do here is look at all the different types of indicators, different ways to look at the market, and give out a balanced approach. Let's take a look and see how the the QQQs, the NASDQ 100 doing. Very similar type of scenario. You had on that sell-off a massive drop-off, right? Pretty violent drop-off on that sell-off. And even with the recovery, not really able to regain its strength quite yet. So there's a divergence between new high, new low ratio and the actual price action. That's more of a negative. Now, what is interesting is that the up-down volume, which is a shorter term look and a different type of look, and the advanced declines, different measurement than new highs, new lows, had a significant improvement over the last week. So again, mixed reading here, not surprising, right? Okay, let's go to some sentiment indicators. Big improvement here in sentiment. As you can see, with the rally in the market, right, this week, that rally basically put our VIX indicator back under the 200-day, back under the 50 by the close of the week, and now you're trading in the middle of the Bollinger Bands, but under the moving averages. I give that, from a volatility reading, a positive. And again, not quite as at the extreme that it was earlier in August at all. So this pop here, basically a good opportunity to trade against the long-term trend, which is declining volatility. Okay, so there you have that picture. Now, from a alternative perspective, just to give a balanced approach here, oftentimes you can see when you get your first thrust, you get a correction and then another thrust up for a test, of the lows, and then of course the volatility drops off. We had a similar scenario before Brexit. You had a move outside of your Bollinger Band, which shows excessive pessimism, and then a retracement which held basically the 200, and then another test on this low. So right now you've had this move up, and the thing that's different about this one, this particular move here, is that we're already under all of our key moving averages and really back into the midpoint. So this structure is a little bit different. But again, obviously what we have to really look at is this price action around 212 and even around the lows of the middle part of the week as well, because it's sort of a upwardly rising pennant or trend line here over the last 2 weeks. You might want to watch a breakdown around that 213.50 level as well. But clearly, critical support is sitting right at the 212 level in the S&P. Okay, let's take a look at another indicator here. And this is taking a look at the ratio between 30-day and 90-day volatility. And all you can see here is we're hitting fairly frothy levels, but it does that and had mild sell-offs here. What we really want to see is these moving averages starting to turn down. So right now, I give the look in volatility still an overall positive until either we penetrate the moving average, the actual number penetrates our moving averages here, but looking like it's still in play and positive to the upside. So there you have the overall picture, big picture, and you can see net a little bit dicey on price action with those SPYs failing the 50-day. However, market internals, volume definitely improving, sentiment improving. Basically, it's looking a little bit more to the upside and more supportive to at least sustain the current momentum. However, again, a break of the 10-day moving average in the S&P, which is under 214. And a real confirmation would be a break under the 212 level. So, and on the flip side, again, a move back above the 50-day moving average, which is above Friday's highs, would really put this whole scenario back in gear as well. Thanks. Have a great week, and see you next Sunday.